Hi, this is Brandon Fredrickson from Trading from Main Street, and what we're looking at right here is American Capital Group. It trades over on the NASDAQ under the symbol ACAS, and this offered a decent scalp trade opportunity today. Really good example of combining time frames and using setup here on the daily chart and actually getting into it here on the intraday chart to reduce your risk and get a better price and whatnot, increase your risk reward ratio. But before I get into this, there's something even more important. I got an email from some fellow in Nigeria today, and he tells me that his father was an oil minister or something, and he was in a car accident, and he really needs my help. All I have to do is just send him a couple of bucks, and then there's tens and tens of millions of dollars that he's willing to share with me, because the government in Nigeria is corrupt and it's hard for him to get this money and whatnot. So I'm not going to do this myself, but as a patriotic American, what I think I'm going to do is I'm going to go ahead and I'm going to forward this to the Senate and the House, because it might be something they might want to look into. And the reason I say this is because, if they think they're going to get their money back on this mortgage mess, if they think that's a good investment, well, they might think this is a good investment too. Well, anyways, now that we're past my humor, let's have a look here at American Capital. This is a financial stock. And so, this is one of a group of stocks overall that hasn't been doing very well recently in the markets. But one thing I want to point out is that today the market's down over 100 points. Earlier it was down about 180 points. People are afraid to buy stocks, and there's still money out here every day. There might not be a lot of money, but you can make a couple of $100 a day. And if you make a couple $100 a day, you're going to have yourself in a situation that when this bear market does finally end, whenever that is, I have no idea when it might be, but it will end. And when that happens, you'll have preserved your capital, and you'll be in a great position, to take advantage of that. But again, let's look at what we have here with ACAS. One of the things you always hear in technical analysis is that you need to combine time frames. But I don't think anybody ever really understands what that is, because nobody ever really seems to take the time to define what it means to use multiple time frames. So here with ACAS, we've got an excellent example where I can show you exactly what it means to combine time frames. One of the simplest setups in technical analysis is to find a stock that is broken out or is in an uptrend, that it pulls back to support, and then when it pivots off that support, buy it. Well, this is exactly what we see here with ACAS. You can see the daily chart here. Nice base here. Broke out above 23. It's now in an uptrend. Broke out above this $28 a share, and then it pulled back to support. Here's some price support, some moving average support, the whole gig. Now, once it's hit this support, technically speaking, when it breaks above a prior day's high, that gives you a buying opportunity, a buying setup. What I like to do is not necessarily buy there. I might buy a little bit earlier, I might buy a little bit later. But what I want to see is actually an intraday setup. I want to use the skills that I've acquired over the years as a day trader, because using an intraday setup, I can really almost surgically refine the place that I enter the stock. I can get in with a lot less risk, and I can have nearly the same upside potential. And what I mean by that is this. Here you can see the intraday 5-minute chart on ACAS. Obviously it opened up and then it just traded in a sideways basing pattern. This $25.55 was the breakout point right above this. Now, once it broke above this $25.55 point, you could go ahead and put your stop right here under $25.40. Call it, $25.35. This isn't a very volatile stock, so $25.35 would have been okay. you've now gotten into a situation where you've gotten into this stock and you're only having to risk 20 cents to take part in the upside potential that this stock has. And keep in mind, this is a swing trade setup. Now, had you gone ahead and bought this using this daily chart as your entry criteria, you would have gone ahead and entered it above $26 a share. You would have paid more. And also, your stop would have been much wider. At the very least, you would have been using under $25 per share, which is today's low. Most probably, you would have been using either yesterday's low or yesterday's open. Let's just call it yesterday's open, $24. So you're going to be risking anywhere between $2 and $1 per share on this stock to participate in the upside in it, whatever it might happen to have. You can do that, or you can take advantage of this intraday setup that occurred. And this is a beautiful setup intraday here, a nice base, right into the moving average. It breaks higher. It gives you an opportunity to participate in all this upside potential, again, while only having to risk 20 cents. And you've got all the potential of this swing trade. And that gives you a lot of options. You can go ahead and, since you're risking not very much, you can obviously buy a lot more shares. And you can take a significant portion of those shares and you can go ahead and day trade with those. In this particular stock, you might have said, all right, you know what, I bought it 25, 60 was my fill. And it gets up to $26.10. I'm going to go ahead and take some profits. You made 60 cents while you risked 20 cents. And, there you've got that 3-to-1 risk-to-reward ratio that everybody talks about. Let's say you bought 1,000 shares of the stock. Well, and you've got a $50,000 account. Now, what you can do is you go ahead and you sell 800 of those shares, and you just made nearly $500. You've got 200 shares left over, and perhaps you're going to be looking for a target right up here around $27 or $28 a share on those other 200 shares. Meanwhile, you've moved your stop right to your entry point, to your original entry point, so you have no more risk in the trade. Except in the event of some news and whatnot, the worst thing that can happen to you is that you'll break even on this particular trade. And so this is really just an ideal example, like I said, of a stock that offers multiple time frame trading opportunity, which is something I talk about all the time, and I really want you guys to try and find these kind of opportunities. These are the best things that you can get, in terms of the bang for your buck. And it's well worth it to pass up on other trades to wait for these. Even if these only show up 1 or 2 or 3 times a day, in the end, you're going to end up having to risk so much less, and you will make so much more that it's well worth passing up on the other opportunities to just focus in on these, which are much, much superior opportunities.